Ghana will generate about $6.6 billion annually from lithium mining. This is when an Australian mining company, Atlantic Lithium Limited, starts production in 2026, which will create between 1,000 to 2,000 jobs in the central region.
In the quiet hills of Ghana's central region, there's a treasure buried in the soil. It's not gold, cocoa, or oil, the usual suspects for Ghana's economy, but lithium. You know, the white gold that powers our phones, our laptops, and the green energy revolution. When this discovery was announced, headlines screamed about a multi-billion-dollar windfall, a golden ticket that could transform the nation. It sounded almost too good to be true. Well, what if it is? History has a bad habit of repeating itself, especially in Africa, where vast natural wealth has often led to a tragic paradox known as the resource curse. Nations rich in resources somehow end up poorer, their environments wrecked, and their people left with broken promises. So the question for Ghana is a heavy one. Will this lithium discovery pave a new road to prosperity, or is it just a different kind of trap? The story kicks off at a site called Woya, which is on track to become Ghana's first ever lithium mine. The project, driven by Australian company Atlantic Lithium, has uncovered a significant deposit. A study for the project projected it could generate over $6 billion in revenue over its 12-year lifespan. The plan is to produce about 3.6 million tons of spodumene concentrate, the raw material containing lithium, over the mine's life, placing Ghana on the map as a new and important source in the global supply chain for batteries. When the deal was first announced in October 2023, the government celebrated what looked like a major win. They'd secured terms that seemed better than old mining deals: a 10% royalty on revenue and a 13% direct stake in the project. On paper, it looked fantastic, like Ghana had learned from its past and was finally ready to cash in on its mineral wealth for its own people. But in the world of big money and natural resources, the ink is barely dry before things start to change. To get why this discovery is so risky, we need to talk about the resource curse. It's a bizarre phenomenon where finding a ton of natural wealth doesn't lead to a boom, but to economic problems, corruption, and conflict. Imagine winning the lottery and ending up broke a few years later because of bad advice and reckless spending. So how does this happen? When a country suddenly gets flooded with foreign cash from selling one valuable resource, its own currency can get artificially strong. This makes everything else the country produces, like food or textiles, too expensive for other countries to buy. It's a classic case of Dutch disease. Named after the Netherlands went through the same thing after finding natural gas in the 60s. But it's not just about wonky economics. The lure of easy money can poison politics. It creates a massive incentive for corruption, as everyone, from local elites to foreign companies, fights for a piece of the pie. The government's focus can shift from building a healthy, diverse economy to just controlling the money spigot. Ghana has seen this movie before. For over 100 years, it's been a top gold producer in Africa. And yet, many of the communities living on top of that gold are still stuck in poverty, their land and water poisoned by mining, both legal and illegal, or galamsey, as it's known locally. There's a painful feeling that the immense wealth pulled from the ground has mostly benefited foreign companies, leaving Ghana with a mess to clean up. The fear is that lithium could be a sequel. So, how have you dodged this curse? For a masterclass, we have to look at Botswana. When it gained independence in 1966, it was one of the poorest places on earth. Then, they found diamonds. It was a moment that could have gone very, very wrong. But today, Botswana is a stable, upper-middle income country and a role model for good governance in Africa. Botswana's success wasn't magic. It was smart, tough decision-making. First, they built strong, transparent institutions. They negotiated hard with the mining titan De Beers to form a joint venture where the government was an equal partner, not just a tax collector. This gave them a real seat at the table and a direct share of the profits. Second, they managed their money wisely. Diamond revenues were funneled into a sovereign wealth fund, basically a giant savings and investment account for the country's future. This stopped the economy from overheating and made sure the wealth would last. And third, most importantly, they invested in their people. The diamond money built roads, hospitals, and one of the best education systems on the continent. By turning a finite resource into an educated and healthy population, Botswana built a foundation for a future that didn't depend on digging shiny rocks out of the ground. The lesson is clear. With the right strategy, a resource discovery can be a blessing. The real question is whether Ghana has the political will to follow a similar path. This brings us back to Ghana's lithium deal, which is now at a critical crossroads. That landmark agreement from October 2023 is already on shaky ground. In early 2025, with global lithium prices having tanked by over 80% from their 2022 peak, Atlantic Lithium came back to the negotiating table. The company argued that without concessions, like cutting the royalty rate back down to 5%, the Ewoya project just wasn't economically viable anymore. In July 2025, Ghana's government confirmed that it had authorized renegotiating the lease, which still needs to be finalized and approved by Parliament. This sent up red flags for watchdog groups. They point out that a national green minerals policy, which is supposed to guide these kinds of deals, still isn't fully published or implemented, meaning this huge decision is being made in a policy vacuum. Critics argue the company had delays even before the price crash, questioning the whole basis for the renegotiation. This has ignited a fierce debate in Ghana. On one side, there's pressure to get the project going. Local leaders are worried about delays because farmers can't use their land while the mine is in limbo. On the other, there's a deep fear that in a rush to get the deal done, the government will give away too much and lock the country into a weak agreement for decades. A key part of Ghana's plan is to add value locally, to not just export raw lithium ore, but to build a refinery and process it into more valuable battery chemicals. But that requires massive investment, and if the mine itself is less profitable, the dream of a refinery gets much harder to fund. The path forward is loaded with challenges. The environmental risks are huge. Lithium mining uses a lot of water and can contaminate local supplies if not managed perfectly. Open-pit mining can tear up the landscape, destroying forests and farmland that people depend on. There are already concerns that local communities haven't been properly consulted, leaving them worried about the true costs of the project. Then there's the constant threat of corruption. Ghana's struggles with illegal gold mining show just how quickly things can go wrong when there's big money on the line. Making sure the lithium revenue is managed transparently and used for national development, instead of lining private pockets, will require incredible institutional strength. With Parliament yet to ratify the final deal, the intense public debate shows a deep mistrust born from past failures. Finally, Ghana is jumping into a notoriously volatile global market. The wild swing in lithium prices is a perfect example of how quickly fortunes can change. Building your economic future on a single commodity is always a gamble, which makes the lessons from Botswana about saving and diversifying more urgent than ever. This is a defining moment for Ghana, and the decisions made now will shape its future for generations. What do you think? Can Ghana sidestep the resource curse and turn this lithium into a real blessing? Or will the pressures of the global market and the lure of quick cash lead it down a familiar, tragic path? Share your thoughts in the comments below. Ghana's lithium discovery isn't a simple story of striking it rich. It's a story of opportunity packed with danger. The potential to transform the economy, create jobs, and build a new industrial future is real. This mineral could help power the world's green transition while fueling Ghana's own rise. But the shadow of the resource curse is long and dark. The challenges are staggering: negotiating a fair deal in a shaky market, protecting the environment, ensuring communities benefit, and building institutions strong enough to fight off corruption. Ghana is at a fork in the road. One path leads toward the Botswana model, where mineral wealth is carefully managed to build a fair and prosperous nation. The other path leads to a story we've seen too many times before, where the treasure is dug up and hauled away, leaving poverty and pollution behind. The future of Ghana isn't in the ground. It's in the choices being made right now.